As an investor, you should fish where the fishes are. We don't need to stick to US to finding a good quality business. If we simply look around in the world, we can find so many undervalued businesses which have a massive potential. One of the company is called Amazon and PayPal of Latin America, named MELI Mercado Libre. Hey everyone, my name is Ricky and welcome to Peaceful Investor. Before I start, this video is only for educational purpose only and not a financial advice. Making this video takes a lot of time and effort. If you please can subscribe, like and share, it will motivate me to keep going and I promise you to bring the latest and valuable information for all of you. Now let's start and try to understand what this company is all about. Mercado Libre was founded back in 1999 and it's now one of the most powerful tech companies in Latin America. It operates across 18 countries. If you think about it, they are a mix of Amazon for e-commerce and PayPal for digital payments, all inside one ecosystem. On the commerce side, millions of people shop, sell, and use Mercado Libre's logistic network to get products delivered faster. And on the fintech side, through Mercado Pago, people can pay bills, send money, use credit card, borrow loans, and even invest their savings, making it one of the most complete financial ecosystem in Latin America. Now let's look at their track record. Back in 2019, the company generated around 2 billion in revenue. By 2024, the number had crossed 16 billion. That's a compounded annual growth rate of more than 40% per year, one of the fastest among global tech companies. Over the same period, their gross merchandise value grew from about 14 billion to more than 50 billion US dollars. And their active buyer base has now doubled to over 70 million people. So when we talk about growth, it's not just hype. MELI has delivered it year after year, proving it's building a long-term moat in both e-commerce and fintech. Now, big question is, can they keep up this incredible pace? Now let's break down Mercado Libre's e-commerce business, which is the biggest part of company. This is the marketplace where buyers and sellers meet. Think of it like the Amazon. In the second quarter of 2025, Mercado Libre had 70.8 million unique active buyers. That's up 25% compared to last year, and it's actually the strongest buyer growth they have had since 2021. So the platform is still attracting a lot of new shoppers. Those buyers aren't just showing up, they are also shopping more often. On average, each buyer purchased 7.8 times this quarter compared to 7.4 times a year ago. That might not sound like a big jump, but when you multiply it across 70 million people, it's a huge increase in total items sold. Shipping has been a big focus too. In Brazil, they relaunched free shipping with a much lower threshold. That means more products qualify for free delivery, and as a result, items sold in Brazil jumped 34% year over year in June. In Mexico, they have built out their logistic network so much that over 75% of deliveries now go through MELI's own fulfillment system. Faster, cheaper shipping makes the platform much more attractive. Their first party retail business, where Mercado Libre buys and sells products directly, also hit a milestone. For the very first time, 1P GMV went over $1 billion, growing 103% year over year on a FX neutral basis. They mainly use this strategy to fill gaps in categories like consumer electronics, where they want to be more competitive. Advertising is another strong growth driver. Just like Amazon, sellers can pay Mercado Libre to promote their products. In Q2, advertising revenue grew 38% in US dollars and an even stronger 59% on an FX neutral basis. Their display and video ads nearly doubled compared to last year. This is important because advertising is a high margin business. It helps lift overall profitability. So, in summary, e-commerce delivered strong results, 3.84 billion in revenue, up 45% FX neutral year over year, driven by more buyers, more items per buyer, faster shipping, strong one-party growth, and an accelerating ads business. Even though they are spending more on free shipping and logistics, the payoff is clear. The marketplace is growing faster and getting stickier for users. The fintech side of business generated 2.95 billion this quarter. That's up 63% year on year on FX neutral basis. So fintech is now almost as big as the commerce side in terms of revenue. Next, monthly active users. Mercado Pago now has 68 million monthly active users, up 30% from last year. What's even more impressive is that this number has doubled in just 2.5 years. That shows how fast people are adopting their digital payments and banking services. Now, asset under management. This is the amount of money people are saving or investing through Mercado Pago. That's reached 13.8 billion, more than double last year. With growth of 109% year over year, it means more customers are trusting MELI with their savings. The credit portfolio also expanded strongly, reaching 9.3 billion, up 91% from last year. With that, credit cards stood out. The portfolio of credit cards alone hit 4 billion, growing 118% year over year. Credit card now represents about 43% of total lending, with consumer and merchant loan also growing well. Profitability on lending remains strong. The net interest margin after losses was 23% this quarter. That means even after accounting for defaults and funding costs, MELI is earning a very high return on its lending business. To compare, most traditional banks usually operate at around 3 to 5%. And credit quality is holding up. The non-performing loan ratio, which measures loan overdue by 15 to 90 days, improved to 6.7%, better than both last quarter and last year. So even as they grow fast, risk is under control. Finally, payments. The acquiring total payment volume, that's all the transaction processed by Mercado Pago, hit 44.4 billion, growing 53% year over year on an FX neutral basis. That shows more people and businesses are using Mercado Pago both on and off the marketplace. So overall, Mercado Pago is firing on all cylinders. Revenues are soaring, the user base is expanding, people are saving more money on the platform, lending is scaling fast, margins are strong, credit quality is improving, and payment volumes keep rising. It's quickly becoming one of the most important digital financial ecosystem in Latin America. Now let's look at the overall financials. MercadoLibre reported total net revenue of 6.79 billion for the quarter. That's up 34% in US dollars. And if you remove currency effects, growth was even stronger, 53% year over year. The gross profit came in at 3.09 billion, up 31% to last year. Gross margin was around 45.6%, slightly lower than before, mainly because of more free shipping cost and a higher share of first party sales. Income from operations or operating profit reached $825 million, giving them a 12.2% operating margin. That's lower than 14.3% margin a year ago because MELI is spending more on marketing, fintech provisions, and logistic expansion. Net income was 523 million, which is a 7.7% net margin, down from 10.5% last year. The drop was mainly caused by foreign exchange losses of about 117 million from the peso devaluation and higher effective tax rate compared to last year. On cash flow, they still managed to generate 454 million of adjusted free cash flow even after spending 287 million on capex and funding 816 million into fintech loans. That shows the core e-commerce business side of the business is still very cash generative. Finally, the balance sheet remains strong. MercadoLibre ended the quarter with about 11.5 billion in liquidity, net debt of 3.8 billion, and leverage at just 1.05 times EBITDA. On the top of that, S&P upgraded them to investment grade triple B in July, which gives them more flexibility to keep funding growth at lower borrowing cost. So overall, the financials show very strong revenue growth and cash generation, but margins are under pressure as the company reinvests heavily into shipping, fintech, and marketing. Now let's talk about leadership and the company's outlook. MercadoLibre announced a big, smooth transition. Founder and CEO Marco Galperin will move into the role of executive chairman starting January 2026, and the Ariel, who is currently the president of commerce, will become the new CEO. This transition shows stability. Ariel has been running the e-commerce side very successfully, and Marcos will still be closely involved as executive chairman. So there is continuity, no major changes in strategy. On margins, management has been very clear. They expect margins to remain under pressure in the near term. Why? Because they are deliberately reinvesting in the business. Things like free shipping in Brazil, growing the first party retail side, expanding the fintech loan book, and running big marketing campaigns. The company believes this is the right trade off. Short term profitability is lower, but it builds long term market dominance. Over time, they expect these investments to boost engagement, increase cross selling into fintech and advertising, and expand the overall ecosystem. Despite these pressures, MELI is still solidly profitable, generating positive cash flow, and now has an investment grade credit rating. That gives them the flexibility to keep investing aggressively without worrying about financial health. So, the message from management is clear: don't focus on margin dip today, focus on the fact that they are building an even bigger moat for the future. Here are my quick thoughts as an investor. The positives are very clear. Mercado Libre is still showing explosive growth with revenue up more than 50% on an FX neutral basis. Their fintech arm is booming with asset under management and lending both nearly doubling. The e-commerce business is expanding, especially in Mexico and Argentina, and advertising is growing fast, which is a high margin revenue stream. On the top of that, the balance sheet is strong with over 11 billion in liquidity and now an investment grade credit rating. On the risk side, margins are under pressure and likely will stay that way as the company keeps spending on free shipping, one party sales, and fintech growth. Currency fluctuations, especially in Argentina, continue to hurt profits. They lost over 100 million just from FX this quarter. And with the credit portfolio growing so fast, there is always the risk that defaults could spike if the economy slows down. Now let's wrap up our video. So right now Mercado Libre is trading at about $2,373 per share. If we look at valuations, the PE ratio is about 59 times earnings. That sounds high, and yes, MELI does trade at a premium, but remember, this is a fast growing company, especially with fintech scaling so quickly. Now, here is something really important. Don't just look at PE ratio, also check the price to cash flow. On TradingView, MELI's price to operating cash flow is about 17.7 right now. That means investors are paying about $18 for every dollar of cash flow that company generates. And that is a much more reasonable number compared to PE. The reason this matter is because accounting profit can move around a lot due to taxes, foreign exchange losses, and one-off charges. But cash flow shows us the real money coming in from the operations. By looking at both PE and price to cash flow, we get a future price of valuation. And when we compare that to the analyst view, 23 out of 26 analysts rating MELI as a buy with an average price target of about 2,900. That suggests around 20% upside from here if the company keeps delivering. So here is my view. MELI trades at premium, but the growth story, both e-commerce and fintechs, makes it worth watching closely. If you are a patient and long-term investor, it can be a strong compounder in a global portfolio. Personally, I love this business and I have just started investing in it myself. And I will be keeping track of it closely every quarter when they report earnings. And as the company makes progress in the future, I will be bringing you updates here. So stay tuned and make sure you subscribe to follow along with Mercado Libre journey, or as I like to call it, Mali. Thank you.